What is going on, everybody? Welcome to Clay's Coins, here to bring you some information, education, and better understanding of cryptocurrency. Today we're going to talk about some different lingo, some different terms you might hear, and give you guys some better understanding on what those mean so you guys can make some informed decisions for yourself and we can all make some money together. Before we get into it, go ahead and comment your favorite cryptocurrency, subscribe to the channel, hit the notification bell next to it, share the page if you want. It really helps us out. Also, go ahead and hit the Coinbase and Webull links down in the description. The Coinbase one, you get some free Bitcoin just by doing the email and ID verification. The Webull, if you deposit any amount, you get some free crypto for trading any. So go ahead and take advantage of that. You can make some money and we can all make some money together. Alright, so not going to be going to the computer screen yet for today's video. We're going to be doing some a little bit of talking on some acronyms first off. So a couple you might hear quite often are acronyms or terms like FUD, FOMO, DCA, things like that. So FUD is going to be your fear, uncertainty, and doubt. This is a huge strategy used by institutions to scare off retail investors. Those are also two terms. Institutional, those are the big guys. Those are the billionaires. Those are the big companies, the hedge funds. Retail investors, that's you and I. That's us. That's what the institutions like to call dumb money. That's what they believe we are. So that's why I'm here to give you guys some information and education so we can all understand the markets a little bit better and we can get a piece of this wealth and, achieve that goal of financial freedom. So FOMO. FOMO's one you'll hear often. It's fear of missing out. It's pretty self-explanatory, and it's one of those ones where you never believe yourself as a trader you're going to be subject to, but it really goes in so many different ways, whether it's fear of missing out on a big sell-off. If you think everything's running down, you want to panic sell real quick so you don't miss the sell-off, and then little did you know that was just a manipulation play or a swoop down, so big investors could pick up some. You end up missing out when you were in fear of missing out. FOMO happens all the time with buying and selling, even holding. You can have the fear of missing out on the long-term gains and end up holding a cryptocurrency or a stock way too long and missing out on the peaks or whenever you could have gotten out of for a reasonable price. Dollar cost averaging, DCA, that's the next one. That's one that is a good financial investment strategy for, it doesn't work for everyone. It doesn't work for all markets. Last year, some people DCA'd into the stock market and it actually didn't pay off as well as if they would have just gone into some ETFs. Dollar cost averaging is when, depending on when you get paid or how you want to invest, weekly, bi-weekly, or monthly, you, instead of investing $10,000 for the year all at once, you take your paychecks every week, every 2 weeks, however you want to do it, and you invest the same amount every time. It can be into different stocks if you want. It doesn't necessarily have to be the same amount. And one thing you want to make sure of, though, is you're not buying the peaks every week. So one more nuanced hybrid strategy, and definitely one I would implement into crypto if you're going to dollar cost average, is instead of dollar cost rate averaging at the same point every day, because with cryptocurrency you can have a 10 or 20% swing in a day, so buying at the wrong time can be rather detrimental or can prevent you from some of those gains. So maybe instead of buying $100 of Bitcoin every week, maybe just put the $100 into your Coinbase account or whatever brokerage you use, put it on there and have it ready so every second Thursday you're going to go on, you're going to check out the markets, you're going to look at some coins you've been looking at and make an informed decision and buy it at a low point. That way you can consistently, continuously, and with confidence get into strong conviction plays that will end up showing you some profit. This is, however, not financial advice. I'm not a financial advisor. This is never an indication to buy, hold, or sell any stock or cryptocurrency. I'm just going to give you guys some information that I've picked up along the way so that hopefully we can all make money together. So, understanding numbers, different units of measurement, different numbers you're going to be looking at when you first pull up a coinmarketcap web page, something like that. It can be a little overwhelming with all the big numbers you see, especially with cryptocurrency. You have some of these cryptos with quadrillions of coins in circulation. So that's one we'll talk about right off then. Circulating supply, total supply, and max supply. The max supply of the coin if a coin has a max supply. Some don't, some are uncapped. If a coin has a max supply, say we'll use some even numbers here. It's 100 million for the max supply. Those are the most coins that can ever be in existence. There can never be more than that. The total supply you would think is the same, but it's not, because not necessarily all coins are distributed at the same time. So you could have a max supply of 100 million, meaning that's the most there will ever be. A total supply of 50 million, meaning that's the most that are available for people to buy. And then you could have a circulating supply of 10 million, meaning that's the amount that have been bought that are circulating around through different trades and transactions. That's a good way to figure out your circulating supply, max supply, and total supply. You know, if an asset has 100 trillion total coins, the value of that is going to be much lower than a coin with 10 million coins. Because, as people buy it, it's going to become more rare more quickly, and that's going to skyrocket the price up. It's going to become deflationary because there's going to be less supply of it and more demand for it. The next one we're going to be talking about is probably volume. All of these concepts are relatively simple, but sometimes that it can be overwhelming in bulk. But when you take it apart, it's like eating an elephant one piece at a time. You really start to break down and digest the information a lot better. The volume and market cap, and then how they correlate to each other. So the market cap, if you noticed in my last video I went over, the market cap is how much every coin is worth times the total amount of in circulation. So the circulating supply of the coins times the price of the coin equals your market cap. That shows you the value of all of the coins, or essentially the crypto in itself, as of right now. You might see a fully diluted market cap. That ties into what I said about the circulating supply and the total supply. So you could have a market cap of 100 million, but a fully diluted market cap of 200 million. That would be indicative of half of the coins being in circulation and half of them have not been purchased yet. Once they're all purchased, that market cap is fully diluted, and then you have your total market cap. So that's essentially a potential of, if all the coins that were left were sold at the same price, then you have that fully diluted. So that's something that's more of a prediction measure, and noticing how quickly a coin can grow before you notice a big price increase or something of that nature. All right, real quick before we get back into it, go ahead and, if you haven't already, like the video, comment, subscribe. Hit that notification bell next to the subscription. It really means a lot. Go ahead and share this around. We're really trying to get a lot of people as much information as they can so we can take part in the biggest passing of wealth that we've ever seen. And the cryptocurrency market, metaverse, gaming, these are all going to be huge sectors for us to all make generational wealth together. So the more people that see this video, the more people that get interested in this content, the more money there is to be made, and the more lives we can change for the better. All right, so now we're going to get into a little bit of, I don't want to scare you yet, but some technical analysis talk, but not really. We're not going to break down all the terms for what people like to call astrology for men. But technical analysis, we're going to talk about bull markets, bear markets, corrections. A bull market is essentially, a non-stop, not non-stop, but a long-term uptrend when it seems as if it can't keep going up, and it does. A bear market would be the opposite. It's coming down, coming down, coming down. You would think that if the market's coming down, you're losing money. That is not true. Billionaires are made in bear markets. Only millionaires are made in bull markets. When the markets are down, that is an excellent price point to buy. It's not an indication to buy, hold, or sell, but when the price is the lowest, there's the most money to be made on the climb back up. So always be prepared. You can also get into options, which we'll go over at some point later on in the channel, for call options and put options. There's always money to be made on the way down and the way up. All right, guys, this is a application I really like, TradingView. You guys can download it. It's free. They have a paid for version, but you get so much out of the free version. It's very similar to the Webull desktop. If you guys use Webull at all, it's just looking at charts and being able to understand trends and patterns and stuff like that. It can just be beneficial. So things that happen. You don't just see a percentile on a screen in the green or the red and try to figure out what's happening and why your money's going up or your money's going down. When you can use different indicators and have a better understanding, it gives you more confidence in the fact that you're putting your money in a good position and that it's paying off in a way that you predicted it would, because no investment strategy is planning on losing money. Everyone gets into investing to gain money. So the better chance you have of gaining money, the better off we're going to be. So we're not going to get too much into the charts. This may look like a lot. We don't need to worry about this blue, yellow, and red line right now. All we're going to be looking at is, I have some, colorful indicators down here, and we'll start off with the support. Your support line, your resistance line, and what a channel is. Just because you have something going in between a support and a resistance does not mean that is the channel. That's why I chose Ethereum. We're looking at the daily chart. So each one of these candlesticks, which is what these are referred to as, is 1 day. This is 1 day of sales. So either buying, selling, whatever. This is 24-hour periods for the candlesticks. As you can see here, a support is a price point where there's a tremendous amount of buying power. When a stock or crypto hits a certain point, a lot of people want to buy it there. So it's going to find support there, and the price is going to come back up. As you can see, it starts to fall, gets closer to that, it comes back up. As you keep hitting onto that, if you would like a jackhammer hitting the ground, you can keep testing that support, and you can see that over time, if the support is strong enough, it holds up, and it'll keep coming back over weekly, monthly, even yearly periods of support you have. When it breaks through, you can fall to different levels of support. There's the Fibonacci levels that you guys can look up if you want to get into that. I'm not going to go into anything in depth like that right now. Your resistance is going to be the opposite of it. It's when the price goes up to a point that you have a lot of selling pressure, because people like that price, they want to make money at that price, so they're going to sell off. You're going to have a resistance that's going to resist the price from going up any higher. As you can see right here, it traded up, it wanted to break out of this little resistance here at 4,200, and then it finally did. And then that resistance that was selling pressure became a support and became buying pressure. It's very cool how things like this happen, and then over time, as they're balancing out through these different levels of support and resistance, you have a channel form, and that's what these blue lines are indicating right here. You have an upward channel, as you can see on the bottom of the screen, starting back in August of 2021, going until today. We have this channel where, regardless of support or resistance, this crypto ends up coming back and bouncing off of this channel and moving upwards, and then you have a resistance point up here. So you're going to have multiple levels of resistance, psychological resistance, support levels, and then you're going to have, different levels inside of your channel even that you can, most of the time, until as of recently with these last few days, you can see nature has a way of reverting back to a mean and finding an average price even in an uptrend, downtrend, or a sideways trend. It's actually very cool, and the more you study charts, the more you look at things like that, and the more we learn together, the easier you'll be able to identify trends like this, and you'll have a better understanding. That's the goal here. Alright guys, that's it for the video today. I hope you guys enjoyed. Go ahead and like, comment, subscribe, share it, hit the notification bell next to the subscribe, and let's get out there and make some money.